I'm here to just tell you a little bit about Middle East, North Africa, and some of the fintech that's going on there. Just to kind of set the stage, the idea really is we've gone through and done all these fintech semifinals. You're going to see a lot of them pitching. So it's quite nice to get a little bit of a sense of what's going on in the region from a fintech perspective. I've got a lot of experience here in Asia from 11 years being here, and now about 4.5 years I've been based in Dubai and running Next Money events, bringing the community together. So when we look at the markets, we really have two kind of sets of customers when we look at Middle East, North Africa. We have the market where there is a small amount of people, they've got a lot of money, and they've got a lot of expenditure. And what typically happens, obviously, in that kind of an advanced market or market where the consumer has a lot of disposable income is their mobile phone plan is obviously a postpaid plan traditionally. They've got unlimited data. They've got the latest phone. They've got access to everything. So what you see from a fintech perspective in those markets that are over there on the right, the Saudis, the UAEs, the Kuwaits, Qatars, the Omans, a lot of petroleum markets, you see that the fintechs over there are really looking at digital banking. How do I digitize the process for existing banked customers? Mobile payments. Now I'm looking to make faster and less frictionless mobile payments through the use of mobile or wearables. E-commerce. While e-commerce has been something that's been a big boon for the US, for China, throughout Southeast Asia, one of the things that's really kind of ticking over is e-commerce in developed markets in Middle East, North Africa. And again, mostly because the products aren't made in our region. They're made outside of our region. So the trust for who you're going to get them from is really what the challenge is from a logistics perspective versus a financial services technology perspective. Everyone has a card. Everyone pays with cash because you're not really sure who's delivering it to you. And then financing SMEs. The banks have always been financing the larger corporates who then come into these markets, build the infrastructure, service the community, but the local SMEs have been struggling in terms of getting proper loans and lending to then drive and build their businesses for the local economy. When we look at the other market that's within Middle East, North Africa, there's very large populations with very low per customer income or disposable income. However, there's so many people there that you have to rely on volume. But obviously the challenge here is that since they don't have the income, they don't have the technology that's sitting in their hand. So they'll have either the borderline brick phone they used to. Now they're moving into the smartphone world. It's not going to have quite the speed, the size, the latest version. And so therefore, if you develop an app for this market, it has to be incredibly backward compatible if you're going to capture a large volume of these consumers. You have to then also realize that everything can't be digital. They have to interact in the physical world. So when you start looking at things like financial inclusion, it may be their one digital product. You start doing mobile money. You have to do cash in and cash out. Otherwise, your technology is not going to hold. POS acceptance. While it seems relatively obvious that most merchants are going to have POS acceptance, here there's a lot of innovations around how can I get lower cost POS acceptance, whether it be from a card or a mobile phone. How can I get more merchants to be able to accept electronic payments? And then SME lending. Same problem, different market, SMEs without access to finance. When we look across the fintech landscape, because of where we're at from a fintech perspective, it's going to be much more nascent than you would see in most Asian markets. So 50% of the fintechs today are payments, pure payments. 34% of those are lending. And then we've got other, which is, depending on the market, there might be a wealth category, there's money transfer, there's insurance, which is starting to rise, and then you start to see, obviously, the blockchain, crypto come in with all the same issues around what's the regulator want to do with that in the market. But because of those two different markets, the one where there's lots of people, very little money, one with lots of money, very little people, we actually only see about 4 markets where almost all of our fintechs come from. So the UAE, Jordan, Lebanon, and Egypt dominate the fintech landscape. And in fact, the UAE is where 3/4 of the fintechs will come from next year. The acceleration that we're seeing in fintech is not across the board. It's not everyone's rising at the same time. The UAE and the development from their perspective, from a regulatory perspective, is starting to make it more and more attractive to start there. And there's a couple others that are challenging it. In fact, I think Bahrain may come onto the stage of some of the things that they're doing. But then once you start your fintech and you get going, you need to then grow your market size. And so 5 out of 10 of those startups are looking to expand into Africa. That's where their next market's going to be. They'll obviously start to grow their presence in the GCC or in Middle East, North Africa, but they really then, when they sell and they sell forward and they say, where's my future? Their future's in Africa. Whereas 3 out of 10, their future's here in Asia, which is a good reason for me to be standing up here telling you about them. Funding. Obviously incredibly critical if you're going to launch a fintech in one of our markets. $100 million over 10 years is nothing, especially when you start looking at these markets and how much money has been pumped into fintech over the last decade in Asia. The piece here is that as we look at this and we say, where is it going to go next? We think that this will double, another 100 million in the next 2 years, and another 300 million in the next 5 years. And typically, it's hard to see this. You'll be able to pause the video later and look at some of these graphs. But the reality is what you see up here is you see just about everyone, 50% of them almost, have raised under $1 million. That means it's easy to get angel. It's really difficult to get follow-on. The market has to develop. We need to see more success stories, and the funding will come. Lots of words. My big pet peeve is when people put words on this on the screen. So you'll be able to look at this later. But the reality is when we look and say, where is MENA going, and how is it going to move forward? There's some interesting things that are happening. There's a lot of market opportunity. 1 in 5 adults is banked. That's a lot of opportunity for digital banks as well as for mobile money. SME lending is only at 50% of the global average. There's a lot of SMEs that need money. E-commerce, a massive uptick. Lots of private-public collaboration. We've got fintech sandboxes. We've got regulators that are open to change, that are creating and giving out new licenses so that these fintechs can come and thrive. We've got banks that are starting to move beyond showroom innovation. They're actually starting to engage with fintechs and starting to develop things. Pure digital banks are launching. Fintech is seen as the new oil. The lower the barrel of oil, the more you have to make your money elsewhere. Financial services is a good thing for a lot of these countries that want to become hubs. The fintech community is starting to grow and starting to establish a foothold in Saudi Arabia being one of the key markets in our region. And then we're starting to overcome barriers. MENA needs to be seen not as a hard place to come and start a fintech, but a place that you want to come and start a fintech. And I think that'll take a few years. Obviously, with Next Money, I try and promote these ideals. We run a number of events around a number of different topics to bring that community together to drive MENA forward. So what I'm going to leave you with is a short video about some of the things that we've done.
regulators, we have this threat of substitution. It's possible to live your entire financial life without a primary relationship with a licensed traditional financial institution.
As a bank, we are very much open to the community, all right? And I guess this is what I can say. We support the community very much. Dubai is a great place for us to that strives for innovation. It's number one in so many things, and we want to be the number one in digital banking as well.
Having the ability, for instance, for your medical records to exist, albeit in an encrypted format, so that any doctor or any hospital always refers to a single golden source of your data.
I don't think anybody is selling blockchain, and to your point, these organizations, and I think there's multiple organizations, I know of retailers that are doing this, they're all investing in blockchain. How can we enhance a consumer experience? How can we enhance an everyday customer experience? What value are we bringing? And I think that's when you start to see scale.
It's not an easy to justify decision. Who's going to choose to go onto blockchain right now and go, yeah, I'm going to launch a whole bunch of stuff because it's super secure, I'm going to keep my job, and that's brilliant. It's actually really hard. Flipping it over, the network effect of people coming onto it, so the people who are brave, who are bold, or are starting from scratch or starting from new, we're going to break past the legacy, are the ones that can use it, and they will show the way.
Innovation always comes before regulation, right? And that is pretty much what is happening here. There is a lot of innovation, but we need to involve, as Wakas was saying, we need to involve the regulators.
What is the shift that is happening within this region? And what we noticed was over the past 8 to 10 months, there's a strong shift specifically within the financial sector as far as customer satisfaction is concerned. We're seeing this move for financial institutions where they're really focused on transforming into customer-centric organizations.
The reason we did this using an ICO and not any other traditional form of investing is because we wanted to get customers at the same time. It's sort of like by getting your customers as investors, you actually bootstrap the business and you're able to get to profitable state even quicker.
We're able to now work with insurers quite proactively. If they want to target a certain segment of the market, we know what they've got to do, be it in terms of price or product features, to win in that market.
All that really matters is the customer. I mean, I think customers determine our success. So whoever is going to capitalize on that wins in that. The party that's closest to the customer in any market, who's at the top of the value chain, determines what happens beneath it. So I think insurers who get that mentality will partner with you if you really, quote unquote, control the customer experience.
So, moral of the story, bring your money, bring your startups, come to Middle East, North Africa, and join us at Next Money in Dubai. Thanks.
My name is Paul Ark. I am absolutely thrilled to be the last person standing between you and your lunch. So as I share thoughts on Thailand, I will hopefully be informative and entertaining, and if not that, then at least efficient. And are we good to go? Well, looks good here. I don't see anything up here. Perfect. Okay. So my name is Paul Ark with Digital Ventures. I'm here to talk about your fintech postcard from Thailand. Before I start, I'm going to take this opportunity for a shameless plug. Digital Ventures is the fintech arm of Siam Commercial Bank, which is the oldest and one of the largest commercial banks in Thailand. Digital Ventures is responsible for dealing with all things technology and fintech in the financial services area, whether it be investments, development, acceleration, and partnership. And can we get back to presentation mode? Okay, great. So let me start by talking a little bit about the macro and banking landscape in Thailand. I'm going to warn you, my slides are fairly busy and meaty. If you want to take shots, go ahead. I'm going to post a SlideShare link on Next Money's Facebook page later, so you, instead of focusing on all the numbers, you could focus on this ugly mug. I'm not going to delve too much into detail for each slide. I just kind of want to leave you with some high-level insights. So if we look at Thailand in its place among ASEAN's top 6 economies, I like to say Thailand is in that sort of Goldilocks zone of economic development and tech savviness. We're neither too big nor too small in any given area. I think we are just right across the board. So I know a lot of fintech investors who spent the last few years combing through places like Singapore with big economics, small population, or Indonesia with big population, slightly smaller economics. And now they're starting to look at places like Thailand, which is kind of in that sweet spot for both. So this is a very timely time for me to come up and talk about Thailand. I'll say Thai people, probably one of the most remarkable things about Thai people. Okay, no problem, better. And the thing about Thai people are incredibly digitally savvy. They are voracious consumers of digital content and social media. They are among some of the top users of the top digital and social media platforms in the world. You know, one of the biggest markets for Facebook, Suvarnabhumi Airport is the most Instagram location on earth. Paragon Shopping Center cracks the top 10. Of the 64% of the Thai population that access the internet, half of their time is spent on YouTube. So Thai people, tech-savvy Thai people, are now actually watching more videos on YouTube than they do on television. So the opportunity in the digital space is amazing. And Thai people will access the internet via mobile twice as likely as they are on a desktop. So this is a very digitally savvy, mobile-first population. If we go back to, since this is fintech, I'm going to talk a little bit about the financial infrastructure. You know, we have some very sizable banks in Thailand, at least by Thai standards, which, you know, are quite proud, or have been quite proud, of their fairly large staffs and bank branches, which in a not so bygone era would be quite a source of pride and strength. But as we start thinking about the digital space, it now becomes a source of vulnerability. So much so that our bank CEO just last week shared his vision for Siam Commercial Bank over the next few years, where he promises to drastically reduce the physical footprint of our bank in favor of a more digital footprint. So, you know, I think he's sort of planted a flag in the ground and said that we are going to go digital. And it's only a matter of time before I think our peers follow suit. If we look at oops, okay, a little bit glitchy there. If we look at how Thai people are digitally savvy, but we're working with a very traditional banking infrastructure. So if we look at the consumer behavior of people in Southeast Asia, we still traditionally do online payments via cash on delivery. So the presentation's a bit glitchy, but where it says value is supposed to be about 67%, if I have my math correct. 67% of people in Southeast Asia do online payments or online commerce via cash on delivery versus credit cards or other online wallets and payments in the Western countries or in China. If we start to do a bit of a dive in the startup ecosystem itself in Thailand, it's a very strong ecosystem, or it's a fast-growing ecosystem growing from a small base. So the ecosystem in Thailand, like most of the economies in Southeast Asia, our startup ecosystem is only about 5 or 6 years old. So it's very nascent, still predominantly first-time entrepreneurs, but growing at a rapid clip. So the Thai startup ecosystem has grown 50-fold over the past 5 or so years. But as a country, actually only makes up less than 5% of total VC funds raised in the regional startup space. So Thailand is a country on the move, but still playing a little bit of catch-up. And if we overlay the fintech scene on that, we see that fintechs make up about 17% of total startups funded in Thailand by number, but 40% of all VC funding that has gone into Thailand has gone into fintechs, which is quite remarkable because if you look at global numbers, fintechs account for about 11 to 12% of VC funding globally on average. But in Thailand, fintechs are a very, very strong number 2 after the e-commerce space. And like a lot of these postcards, you're going to see one of these very rich ecosystem slides. Of the country's 2,500 startups that we estimate, only about 3 to 4% are fintech. So, you know, a lot of funding going in, just a small number of startups. So I'd like to interpret that as a lot of opportunity for growth, because if we look at those fintechs, okay, another little bit of a glitchy slide. That big purple blob is payments. And payment startups in Thailand comprise 90% of all funds raised in the country, which leaves a lot of opportunity for all the other verticals, which include insurtech, payments, not payments, sorry, that's the big one, wealth, lending, and whatnot. So even though, if we look at banking, the infrastructure is still largely physical, a lot of legacy infrastructure, but the financial services industry is rapidly moving towards an inflection point in the development of financial services. So if we look at where banks have been traditionally with regards to digital banking, it has been growing from a small base, but it is a base that is growing and moving in the right direction. Digital mobile bank accounts overtook internet bank accounts in 2015, and basically almost double, approaching double the number of mobile banking accounts. So again, this gets back to a very mobile savvy population. In terms of transaction values, it's still heavily weighted towards internet bank accounts, but we're going to see that change over the next few years. I think the same could be said in terms of that growth path, that, you know, the same could be said for regulatory action as well, as it does for startups and banks. Regulators are never really known to be very fast moving, but the Bank of Thailand, as well as some of its fellow regulators, have been showing a lot of interest in fintech development over the last few years and have started to move quite aggressively. So as early as 2016, the Bank of Thailand started talking about cashless initiatives and coming up with the idea of a new payment infrastructure which they dubbed Prompt Pay. Well, it not only became an idea, they actually pushed the banks to implement this about a year ago. So Prompt Pay launched in January 2017. It hasn't been without its glitches, but I would say by year end, so just as of a few weeks ago, 40% of the country, of individuals in the country are on Prompt Pay, which facilitates peer-to-peer payments in the country at low or zero cost. Some of the new initiatives that have been launched late in the year are launching a national standard QR code, as well as facilitating biller ID payments. So there is a very strong move to go cashless. Also last year, the Bank of Thailand helped facilitate the doubling of POS terminals in the country to about 1 million. So there is definitely a move towards getting a country that is largely in love with cash to one that is cashless. And the Bank of Thailand's not alone. Without going into too much detail, the Bank of Thailand launched a regulatory sandbox in 2016, followed a few months later by the Securities and Exchange Commission, which launched their own. Just this month, the Board of Investment initiated a smart visa program to allow entrepreneurs to get a visa, a multi-year visa, for bringing technology and launching businesses in Thailand. And the country's Digital Economy Promotion Agency, or DEPA, just launched a microfund to help support startups and small businesses. So I'm not going to try and cover the myriad of opportunities in Thailand, but I do want to touch on some areas that might be of interest given the size, scale, and momentum for fintech. One, I want to highlight tourism because tourism is one of the pillars of our economy in Thailand. Thailand is the 9th most visited destination in the world last year, 33 million visitors, just under 33 million visitors, with more than half of those visitors coming from within a 4-hour flight of Bangkok, predominantly China, but up and down the Asian corridor. So I think solutions that cater to Asian consumption behavior could potentially get a lot of traction very quickly in Thailand. But what's quite interesting is Thailand is the 3rd largest travel destination in terms of tourism receipts. So we're talking about $50 billion of spend every year. And what's quite interesting, because Thailand is known for not just travel and tourism, but also healthcare. So medical tourism accounts for 4.3 billion of that 50 billion. So almost 9% of the tourism spend in Thailand, and about 8% of the global medical tourism market. So any solutions that sort of touch on fintech, travel tech, health tech, insure tech, IoT, probably has a wide open field in a place like Thailand. I also want to talk a little bit about blockchain, and specifically enterprise blockchain. In 2016, blockchain was the shiny new toy in Thailand. There was a lot of talk about it, very little understanding. But after a year of conferences and discussions and meetup groups, Thai enterprises are now actually dipping their toes in the water. 2017 saw a year where companies stopped talking about blockchain and started testing blockchain, started experimenting with blockchain. So there's no definitive view on where blockchain will ultimately go in Thailand, but enterprises and government are at least willing to engage. And so we're seeing use cases that not only span the entire gamut of financial services, but industries such as energy. We have government services now looking at blockchain, as well as retail. And then a third space I want to comment on is commerce. So I'd mentioned that commerce is quite a big driver in the Thailand ecosystem. It is the biggest, largest funded sector in the startup space, but it's actually a fairly convoluted journey. We have very tech-savvy, mobile-first consumers, but the process of buying something online is very messy. It starts with discovery. So basically, Thai consumers trying to find storefronts on Instagram and Facebook rather than large retailers like Amazon or Lazada. And then shoppers going off-site onto a messaging platform to have a one-on-one communication with these storefronts to negotiate price, availability, sizing, color, before they again jump off and either go to a physical bank branch or ATM, or now hopefully using prompt pay to wire the funds to the merchant, and then getting back on the messaging service to send in proof of payment. So in a lot of cases, it probably takes more time to shop online than it would be to go to the local shopping mall, even in Thai traffic. So anyone that can kind of find a way to reduce friction and pain points in this area, I think stands to gain quite a bit from this ecosystem. So again, that is just sort of a quick overview of Thailand. I'll have this presentation on some sort of SlideShare link. I'm around for the next 2 days and would be happy to talk to anyone about Thailand. Thank you very much.